Hello and welcome to KYC. I am Sharad Dubey and the company on today's KYC's radar is Hudco. It's a Navratna company, you could say, and this is a PSU government company and it's dealing in financing as well. Also, interestingly, let's look at why we have actually got this company. This company is not much talked about in the investing circles. It's a very stable play coming in. But the question remains is there a turnaround or a positive news flow expected to come in? What are the growth targets looking like for FY26? That's the first question I'll be asking. The second one is a lot of state governments have been signing larger MOUs. So will this actually fructify and in a decent timeline? That would be very much important to track. The third important question is why I have taken this company in KYC is the AUM shifting towards high yielding products? That means will the operational numbers benefit going ahead? That's a question to be asked from the industry. The fourth question is that the NIMS, that's expected to go up past that 4.5% mark. Management has been guiding and performing in that 4+% NIM margins, and also looking at the recoveries. There are 10 major projects where the recoveries can come in at 730 odd crore rupees. Then that's an important question to ask. And what should the investors watch out for 2026? No major updates. Company has come out since its Q2 earnings. So we'll be looking at some kind of announcement, if there is any, to give us a sneak peek into 2026. So these are the important questions for Hudco going ahead. But I would like to actually show you what the company is all about. It's one of the major financiers in the urban infra segment and the housing projects. And we are waiting that the private capex picks up, but the government capex, already the company is a direct beneficiary to that. Now, the company itself is important for the government objective of housing for all, the affordable housing finance, and mind you, the interest rates are on the downtick. Government holds 75% stake in the company, no major change. As it is, it's there, and largely institutional holding is also the same. It's well-established relations is coming in with the different state governments. I had pointed out 7 to 8 lakh crores of MOUs they have already signed. They're the preferred lender for the urban infra and housing projects going ahead. So this is the entire setup for Hudco, how things actually pan out, and look at the differences, how actually the AUM mix is coming in. This is the urban one, that is around 65% of that AUM mix is coming from there. 35% that comes in for your housing segment. So that is something which you will be watching out for when you look about the AUM mix going ahead. So this is the entire picture we have got for Hudco. But now we'll move on to our important segment, and that would be what are the ratings which we will be judging the company. And interestingly, the rating parameters, remember this is an NBFC company as well, so we have tweaked it as per our regular programming. There will be income statement, balance sheet, but asset quality and operational parameters, they'll be very much important. And the usual which we serve you at KYC, this includes the shareholding, street trade, which is nothing but the shareholding returns across various time frames, and valuation and street coverage. And the street coverage is basically tweaked into the outlook segment, and that is also very much important. So these 8 parameters will be giving the KYC ratings to the company. But now let's move on to the first rating, which is very much important, the income statement. Let's look at the numbers, how they pan out, and we have taken FY23 to FY25 numbers. Largely H1 numbers have been stable. Net interest income, significant up move, 30 odd crore rupees, and that has gone up to almost 3,518 odd crore rupees. So that is something which we'll be looking out for. The provisions over there, they are kind of in the negative side, but on the higher side, almost 410 odd crore rupees coming for FY25. PAT is something which we always look at this company that has actually jumped significantly. We could say more than 50% jump in the PAT is there if you look at the last 2 odd years from FY23 to FY25. So net prima facie, the important parameters which we judged in income statement, I'll give a thumbs up when it comes to this company. The second one is balance sheet, and there is some concerns in my analysis, and that's why I'd like to point that out. Capital and reserves are fine, but let's look at the reserves part. They're decent, around 16,000 odd crore rupees. The stress doesn't come in that numbers. Stress doesn't come in capital, stress doesn't come in reserves, stress doesn't come in net worth. But borrowings, that has significantly jumped up. It was, below 65,000 odd crore rupees for the last 2 odd years, and FY24 this went to 74,000 crore, but a big jump 1 lakh crore rupees plus borrowings is coming in, and of course this is a very asset heavy kind of a business as well when it comes to financing. So the question we'll ask is, are the cost of funds actually sustainable? Is the company able to maneuver across these balance sheet issues? That is something which is concerning me also, and because of that I will give a thumbs down for this balance sheet parameter. The third parameter is the asset quality. It's very much important. The NNPS, GNPS, we already seen in the PSU banking and a lot of NBFCs, this asset quality improvement is a very long-term structural trend, and out here also there is nothing different. Let's point out the GNPA numbers first. See how there has been a gradual decline, and for a financing company, when these asset quality ratios come down, that means the asset quality is very stable. Look at the GNP numbers. It was just 2% plus in Q2 FY25. It's down to 1.21%. So that is a very strong number. Same thing goes for NNPS also. Same story is playing out, and it's virtually not there anymore. And the provision coverage, that has been decent, and it's stable at 95% currently, and better the provision coverage, that is also a very strong indicator for a company. So net asset quality, I'll give a thumbs up for Hudco. Operational metrics, this is also very much important when we are judging a company like this of this stature, and one by one let's point out the metrics, how important it is. AUM, that has significantly jumped up. It's almost 1.25 lakh crore in FY25, and disbursements also, there has been a volatility in that. The disbursements not so much as compared to FY24. That's roughly around 40,000 odd crore rupees if I'm not mistaken. And NIMS, that has been decent. It's flat almost, you could say 3.3%. So will that aspirational target of 4% plus be achieved going ahead? If that happens, will it happen via the shift in the product mix, which we had spoken earlier, for the high yield products? But ROAs, return on assets, that's also stable. FY23, this was 2.1%, but FY24, it's on the higher side, roughly 2.4%. So that's also something which we'll be looking out for. But ROA is very much important, and generally when a 15% ROE comes, be it a finance company or even a non-finance company, it is a good return to the shareholders, and it's a healthy indicator, and this is what's happening here. 11% it was in FY23, and now in FY25 you see that has gone up to 15%. So I will give a thumbs up for this operational parameter segments as well. So we have done almost 4 important financial parameters which we have judged the company on. Let's move on to the fifth one. It's also very much important. This is the shareholding segment. Let's look at the shareholding segment, and remember this is a PSU government owned company. It's of course Navratna also, and the promoters here, they are having roughly 75% stake. That's of course the government of India. No major change happening here, and mind you, the FIs, they have actually reduced their stake. 2.5% it was there earlier, now it's below 2%, but not major sell-off. Also DIs have actually on the other hand increased their stake, so that actually nullifies. And public, it's been decent, it's around 12%. So no major trend actually coming out in this analysis. Based on that, I would be giving a neutral rating for this segment. Also, let's move to the street cred segment. This is very much important, is have the returns actually come or not, and this have taken it for the 1 year and the shorter period time frames. 1 month stock is down 11%, of course is the impact of the market. 6 month share performance is down 16%. 1 year also the stock is not moving, it's down 16%. Year to date also the story remains the same. Of course it has been a multi-bagger in the last 5 years, around 400% plus. But if you are a short-term, medium-term investor, nothing much happening in the stock, and even the volumes have dried up, and that's why I've got this company in KYC to figure out, is there any strong outlook going ahead in 2026, because the company is having lack of triggers mostly in 2025. That can be a reason for lower disbursements also, but that's what we'll get from the management. But now for street cred, I will give a thumbs down when it comes to Hudco, and there are done with almost 6 of these important criteria. The 7th criteria is the valuations. Not much to look at, and for this company itself, I wouldn't get so much peers, but net it is still decent from its historical averages, and it's looking almost decent. So I would give a neutral rating when it comes to the valuations as well. But the most important thing is outlook. That is where my interest lies, and our show's interest is also lying because not much has happened in 2025, but can something happen in 2026? That's the question I'll be looking out for. AUM guidance of 1.6 lakh crore for FY26. The H2 is still left to see the numbers. The disbursement guidance, it is still at an elevated level of 50,000 crore rupees for FY26. So over there also we'll have our views. FY27, the AUM growth, that's expected to be around 25 to 27%. Will the management stick to this growth, or will it be a decline? We'll be asking that same question to the management, and it's a long-term growth target of FY30. AUM is maintained at 3 lakh crore rupees. That's a big amount as well. Spreads, it's around 2% plus, and margins of 3%. That's the kind of aim the company is doing. But the net zero NPA company already is 0.007, which I had pointed out earlier to you. Now they're planning to become a net zero NPA company in the next 15 months. So the ambitions are lofty, but will the company actually come and complete and execute them? That's the concern, or we could say the main question which the street will be asking to the company. But overall, for net, the outlook, it still remains unchanged and it's showing strength. So I would definitely be giving a thumbs up for it. So this is the total ratings, I have given for this company, and out of these 8 ratings, I would like to actually revise this. Income statement, asset quality, and operational metrics have been really strong, so I've given a thumbs up for it. Let's look at the shareholding and how the movement has happened. So kind of valuation and shareholding, it's a neutral rating. Street trade, not much returns have come to the shareholders for the last 1 year or so, like that. And the outlook itself, that is something which I really liked. And overall, for the KYC rating, I would be giving the company 5 out of 10. It's a decent, okay performance when it comes to Hudco. We are now joined by Sanjay Kulshrestha, who is the chairman and MD at Hudco. Thank you, sir, for giving us your time. My first question to you is, what is Hudco's growth target for FY26 in terms of loan disbursements and even the net profit?
Yeah, you are very right that we need to work towards enhancing our figures. 2 years back, we had set a target that the AUM will become 1.5 lakh crores. And you may be aware that till Q2, we had already achieved around 1.44 lakh crores of the AUM. So definitely the work is going on, and we are reviewing the MOUs and their progress and how they will be resulting into our loan book. And definitely we will be achieving more than what we had committed, that is 1.5 lakh crores by this fiscal year. And in the same length, I will also reassure that whatever targets till 2030 we had committed to the market and the guidelines we had given, I think 3 trillion, that is 3 lakh crores of the loan book, we will be achieving.
And Hudco has signed MOUs with multiple states, and they are worth roughly 7 to 8 lakh crore rupees. That's a very big amount. So where does this stand in terms of execution and actual conversion? Can you just give me a timeline when this entire conversion will start taking place?
Generally, these are very large infrastructure project and with good gestation period. So the convergence will start from first year, and it will go between 3 to 5 years of the time, because starting from the land acquisitions to the EPC contract to the commissioning, backward and forward integration. So it will take some time. So the project generally starts from first year, and the completion on the basis of the projects and their segment is in between 3 to 5 years of the time.
And basis on the strong sanction pipeline going ahead, the management is expecting to clock at least 25% AUM growth. So what will that look like going ahead?
So I think for at least for 2 to 3 years, we will be achieving 25, more than 25 years, 25% of the CAGR. And I am definitely very sure the way the government of India is coming with the initiatives and the way our cities required capital infusion, I'm very sure that we will be achieving around 25%. Because if you see, Hudco is a sector agnostic company. So we are into every sector which are defined under the harmonized list of government of India. So I don't think that the potential of the growth will be a restriction towards the company, but definitely we'll have to see our financial ratios while going with the figures to achieve.
And Mr. Kulshrestha, the healthy AUM growth has been seen, and interestingly, There is a shift in the AUM mix happening to higher yield products like urban infra. So what will this mix look like going ahead in the future? And will we see a positive or a favorable impact on the margins going ahead?
So now we are a infrastructure finance company. Earlier we were used to be the housing finance company. So as a IFC, as per the RBI regulation, we have to achieve 75% of the infrastructure. So we will be maintaining that infrastructure portfolio of 75%, and balance will be housing and other part other than the urban infrastructure. Regarding the spreads and the NIMS, I don't see any reason that we will be compromising on our spreads and the NIMS, and we will be maintaining our current levels.
NIMS back to 4.4% yield, coming in at almost, and a yield as at 10 odd percent. So how far are you from getting there? These are important lofty targets to look at.
No, we had not targeted 4.4 kind of names. I'm very sure, because we are into the segment of the social sector infrastructure development. We need our projects to be viable, sustainable, and the bankable. We does not compromise on the bankability of the projects, and the way repo is coming down and government is supporting, the credit enhancement of the project is coming up. So I don't see that it is required to have a name like +4, but yes, +3 will definitely be our figures. That is what we had guided our in our earlier communications also, that we will be +3 kind of name and +2 kind of spread.
Sanctions and disbursements under PM Awas Yojana, they are also expected to pick up in the coming quarter. So where does this actually stand? How do you see the government housing schemes such as PMA, urban renewable programs influencing the demand going ahead in 2026?
PMAY 1.0 was very successful and ambitious program of the government of India, and I'm very sure that PMAY 2.0 will also coming up. Few states had already been sanctioned, and they had started working on these projects. And whenever states will ask for any counterpart requirement or any bridge loan requirement towards their contribution of the PMAY 2.0, definitely we will be sanctioning those loans. But at this point of time, no state has came forward to get the sanctions of loan from us. But actually, they are managing themselves, and that's why we are focusing more towards the infrastructure finance.
10 projects worth almost 730 crore rupees are in advanced stages of resolution, with the expected recoveries of almost 900 crore. That means around 50% in H2 and rest in next year. So where does this stand, and what would be your view on the asset quality? Of course, that has been improving over the last 1 year to 2 year basis.
We are on the right track, and if you have seen in first 6 months, we had already resolved around 800 crores of the projects, and now our gross NPA is 1.3 around, and our net NPA is 0.07%. So we are very expeditiously reaching towards the zero mark. That is what we are committed to become a zero NPA company. So I'm very sure that between 12 to 15 months of the time, we will make all out efforts to become net zero NPA company, because some of the cases are in the NCLT or the DRT, so they are all under the legal proceedings, and we are aggressively trying to resolve all these assets.
What is the outlook for the borrowing cost in 2026 given the interest rate trends?
Borrowing costs definitely will come down, and I'm very hopeful that the transmission will come. But as a part of the strategy towards the borrowing to our company, we had already have a portfolio of 16,000 crores which are repo linked. So the day repo was reduced, so our loans are reset. So we had reduced by 25 basis point on the day itself, and there are further 9,000 crores of the loan which are under this advanced stage of the sanctions by different banks, which are repo linked. So generally, we make our policy on the basis of the projections of the market, that whatever we have to borrow, either whether it is a repo linked or whether it's a T-bill linked, what is the tenor, and similarly in the bonds also. Similarly, we make our policies and the strategies towards the borrowing from the FCNR of the or the ECB. So we are on the right track, and I am expecting good transmission. And the way 100 basis point was earlier reduced by the RBI, the transmission has already in the market, and the borrowing cost has already been reduced. in the first quarter, in the first half yearly, we had borrowed around 30,000 crores, and with the average rate of 6.32%. So the figures are demonstrating the reduction of the cost of the borrowing.
Are there plans for raising capital through bonds or other instruments? How is the capital raising program looking like going ahead?
Yeah, we are definitely planning one bond issuance very soon. We were waiting for the rate cut announcements, and since the rate cut has already been there in the market, so definitely we are coming with the bond series, and we are also looking at some borrowings from the Japanese market, and they are at the advanced stage of the discussions. Very soon we will be getting those kind of funds also, around 500 million. We are closing within a month or so. At the same time, if you see, we had started our urban invest window recently, which will be a path-breaking kind of initiative, and under the guidance of Mahua, we are coming with the urban invest window, which will actually provide the facility towards the ULB states and the cities to get the bankable projects, to get the financial closure at a very optimum pricing.
Largely, the stock is not tracked so much by the analyst community, but the investors actually want to know what should they be watching out for your company Hudco in 2026.
I think first is the growth, the AUM, the percentage that we will rising, plus 25%. Second is the potential which are available. If you see, our cities needs to become global, as Honorable Prime Minister has already stated that we need to have 50 global cities by 2047, because cities are the actually showcasing index of any country to become the Viksit. So cities have lot of potential. So Hudco is a company which is investing and into the cities. So a lot of potential is there. Presently, we are investing around 2.5 lakh crores average on a year-to-year basis in our cities, and it has to grow up between 5 to 8 lakh crores. So definitely the potential of lending is there. At the same time, the way rate cuts are going on, so we are expecting that good competitive priced bankable projects will be coming with the ULB. So I think these are the three things that the investor should look at.
Thank you very much, Sanjay sir, for taking out your time and giving an important commentary on Hudco's strategic outlook going ahead. Well, that's all today for KYC. Stay tuned to NDTV Profit.